Did you know that State Farm just told its own agents that their base pay is getting cut by an estimated 35 to 40%? And did you know that for the first time in 84 years, State Farm is no longer the largest auto insurer in America? Today, we will talk about why State Farm is making so many changes at once and what that actually means for you as a customer before your next renewal. Hey everyone, Marquece here with Trailstone Insurance Group. State Farm has been the biggest name in personal insurance for as long as most of us have been alive. But in 2026, a lot is changing at that company all at once. Today, we will walk through what is happening, why it matters, and the questions worth asking before your next renewal arrives. And one quick note before we jump in. If you find this kind of plain English breakdown helpful, we would really appreciate you subscribing to the channel. It is the simplest way for us to keep bringing you content like this. Now, let's start with the final picture, because everything else flows from it. So, from 2022 through 2024, State Farm reported more than $33 billion in combined property and casualty underwriting losses. That is a serious number. The company did recover in 2025 and posted a $1.5 billion underwriting gain, which is real and worth acknowledging. But here's the part that matters most. That recovery came from two things: sharp rate increases on policyholders and tighter expense and claims management. When a company that large loses tens of billions of dollars, the path back to profit usually runs through the customer's wallet and through the claims department. Now, let's talk about the California wildfire investigation into State Farm. In May of 2026, the California Department of Insurance filed a formal action against State Farm over how it handled wildfire claims from the January 2025 Eaton and Palisade fires. The state alleges nearly 400 violations in just a sample of claims they reviewed. The allegations include failing to start investigations on time, failing to accept or deny claims on time, underpayment, and unreasonably low settlement offers. The California Insurance Commissioner publicly said that State Farm delayed, underpaid, and buried policyholders in red tape at the worst moment of their lives. Okay, let's be clear here. These are allegations, not findings. State Farm has the right to contest them at a hearing, and they will. But the fact that the largest property insurer in California is facing the biggest disaster-related enforcement action of this century, that should tell you something about the strain on the claims operation when catastrophe hits. Here's another piece of the picture. In May of 2026, Progressive officially passed State Farm as the largest personal auto insurer in the country. State Farm had held that top spot since 1942. Over the trailing year, Progressive grew personal auto premiums by 11.6%, and State Farm slipped by 0.1%. That gap is not random. It reflects pricing agility, technology investment, and a distribution model that includes independent agents like us at Trailstone. Market share is not everything, though. A smaller book is not automatically a worse book, but losing the number one spot after 84 years is a meaningful signal about where the market is actually moving. And here's the kicker, and honestly the part most customers have no idea about. On May 26 of 2026, State Farm told its roughly 19,000 contracted agents that the company is moving everyone onto a single style of contract and ending a long-standing deferred compensation program. Current and former agents say base commissions are being cut by an estimated 35 to 40% starting in 2027 and 2028. State Farm disputes that exact figure and says some of it can be earned back by writing more business. Either way it goes, this is not a small change. And here's what most people never think about. State Farm agents are captive, which means they can only sell State Farm. When their compensation gets squeezed that hard, three things tend to follow. First, less time per customer. Agents who have to write more policies to maintain their income have way less time for the annual coverage review that actually catches the gaps. Second, fewer experienced agents. Senior agents lose long-tail deferred pay, and some will take buyouts. Some will leave the business, and decades of local knowledge is hard to replace. And third, more pressure to sell what State Farm corporate prioritizes. A pay system that rewards volume over fit pushes agents towards writing more, not towards making sure the coverage is right. None of this means individual State Farm agents are not good people. Many of them are excellent. But the system around them is being squeezed, and the customer experience tends to reflect the system more than the individual. So, what does all of this have to do with you? Well, more than you might think. When you buy from a captive agent who can only sell one company, you are locked to that company's rates, that company's underwriting, and that company's claims practices. If their rates jump, your rate jumps. If they tighten in your state, your renewal can change. State Farm's sales process worked great in the 1980s and 90s, but now it is outdated and customers are losing faith in the company. All right, so here is a real-world example of why State Farm's system is broken. Imagine two families on the same street. The Delgados are with the single carrier captive system like State Farm. When their carrier raises rates 22% at renewal, their options are to either accept it or drop coverage or start shopping from scratch on their own. The Hendersons are with an independent agency like Trailstone. When their carrier raises rates 22%, their agent has already quoted comparable quotes from 3 other A-rated carriers ready to review. Same street, same home, very different experience. So let's talk about some simple next steps. You don't need to panic, but you do need to pay attention. Pull out your most recent renewal notice and compare this year's premium to the last 2. If your rate has been climbing, ask why in writing. Confirm your dwelling coverage actually matches today's rebuild costs. And if you have not had an independent comparison in the last 12 months, that is the moment you get one. If you would like a complimentary review of your insurance, visit trailstoneinsurance.com or give us a call. We will walk you through your current coverage, compare it against our full panel of A-rated carriers. There is no obligation to switch, whether you stay where you are or if you decide to move. You will walk away knowing exactly what you have and what your options are. Thanks for spending a few minutes with us, and I hope to see you in the next one.